Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. And if you're looking for investment opportunities, please click subscribe, join our community. Let's ride this commodity bull market up together. And don't forget to hit the thumbs up button. So today we're going to do charting in general. I'm looking at big trends. Dollar, I'm looking at some other currencies that are charted against the dollar, like we'll say Australia's currency, Canada's currency, the loonie. We're going to look at the CRB index, take a big picture view, because this is what gives you confidence. I get confidence by looking at charts, looking at big downtrend breaks, looking at the overall big picture view all the time and seeing how that big picture view is changing. If we're not changing the big picture view, if everything's intact, continue to pile money in. That's what I'm doing. I'm continuing to cost average in, get my shares, and I like looking at this big picture to see kind of what's happening. So let's jump in. This is technical analysis of a whole bunch of kind of big picture things. And I view the world through technical analysis. I know some people will debate fundamental versus technical. I think the technicals tell the fundamental story. The charts do. And that's how I view things. Over time, if you just looked at the fundamentals, it doesn't really help you very much. You need to really look at the technicals and the charts to see when things are breaking, because that's basically your market feedback. You can think all you want of the fundamentals, but the technicals are telling you what the market thinks real time, right then and there. The fundamentals are important. Don't get me wrong. Supply, demand, fundamentals, what the dollar's doing on a macro level, interest rates, all that stuff matters. But I like seeing things through charts. So let's jump in here. I'll describe the charts that I'm seeing. And this is just a big quote charting out a bunch of different things. So looking at the big picture from 2008, the last top of the bull market, all the way till today, we had a little breakout back test and we're moving on higher. Now, I can't tell you what this looks like going forward from here. I don't know if it's going to come down and go up or if this thing's just going to continue to rocket higher. I don't know the path. But what is important, fundamentally important here, is that we broke this downtrend and we broke it to the upside. The momentum is to the upside now. The downtrend line is broken and we have a change. We are now starting to create a new uptrend. And this is the best time, I think, for anyone to invest on a long-term scale. Think of this scale from 08 to 12, 13 years. I think we're going to see a 5 to 12 year up move here in commodities. And this is when you want to invest, is right at the beginning when you break this downtrend. This is where you're going to see massive price appreciation. It's also a low risk area to be investing in because we broke the downtrend. Down here is a little bit riskier and it reduces risk after you break the downtrend move. And this back test all in here, very low risk, high rewards. Here, CRB kind of zoomed in a little bit on a daily chart. The one thing I do think we might see in the short term is a pullback. We might see a little bit of a pullback. The momentum here, if you look at this big move, this is the momentum charted here, and you can see it slowing down. And I think we're going to probably pull back a little bit and then move higher. That's what's expected. But on a big, huge view, I think you're going to see this thing pull back a little bit and then move higher. The dollar has strengthened some. Now, it may not pull back very much. This is all kind of just, are we just going to kind of do a little pullback and then surge higher? The path is unknown, but it does look like it's slowing the momentum by what I drew in here. So I do think we're going to kind of go sideways to a little bit lower for a little bit. Now, I threw in Canadian solar. This thing looks like it's breaking out of a massive pattern to the upside, broke out, back tested, and it's moving higher. So it's one to look into. This is Canadian solar. I do own a little bit in solar. I don't own very much in the solar companies, but this one looks really good. It came back and back tested or retested this gigantic pattern back in 08, and it's moving on higher. One to look into. Now I'm looking at the NASDAQ composite. Big picture view. It broke to the upside. It did not break down. It held, it broke to the upside, and it's probably going to go substantially higher because it's a big pattern that broke to the upside. It still has some left in it. Now, looking at a big picture view, this thing's looking ridiculous. This is a total bubble. Now, just an FYI, this to me looks like we have problems coming. This looks like this is going vertical. Hyperinflation, they're printing the heck out of it. I don't know, but that does not look like a normal chart to me. Anything that goes vertical like this usually likes to have a huge crash. So you've got two options here. We either crash hugely or we go into a hyperinflation and it continues higher. It's I wouldn't want to be in either one of those scenarios, and you'd be better off in commodities. In Germany, when things went vertical and remained vertical in their hyperinflation, the first thing that went vertical were their stocks, and then everybody turned to gold and commodities second. So your values in commodities, we know that by the ratios. The ratios are telling us that commodities have never been as cheap to stocks in 100 years. If stocks continue higher and they don't want this thing to fall back down, commodities are going to catch up eventually. It's just a matter of time. And we see the dollar, it has broken its downtrend or its uptrend to the downside. S&P 500 still, it's looking like it's going vertical. The CRB all the way back to 1450. We've been moving on up, broke out of the pattern, and we're moving higher. I'm going to do a little bit different view right here. This is another view of it. One thing I want to show here, this is the Reuters Jefferies CRB index back to 1749. We broke out of this at 1970-71. What happened in 1970 and 71? If you're on this channel and you like commodities, you know exactly what happened. We went off the gold standard. And look what the price happened. Look what commodities done price-wise since 71. They've been flying on higher as it moves in an impulse move higher, consolidation, impulse move higher, consolidation, impulse move higher, and so forth. It's the dollar that broke this. This was back when we were on a gold standard. Think of a commodity to gold ratio. And all it does is cycle back and forth. Cycles to expensive, cycles back to cheap. Cycles back to expensive, cheap. And the price level was the same. It's roughly around 50 the entire time. Little below 50, little above, little below. And it just cycled back and forth. You go off the gold standard, now it's just ridiculously moving on higher. Here is a big picture view of the CRB commodity index. We need to break this 200-ish level. That's where we want to go. We're going to come up here. We're probably going to do a little bit of a turn, pull back, and we may have to come back up. It's not going to be a smooth ride. I'm not trying to pretend like it's going to be a smooth ride, but more than likely, we're going to come all the way up to the 200 level. We're going to move sideways a little bit because there's a lot of resistance all through here. And then once we break, it's going to be fun. Our portfolios are going to be smiling along with us. Now here's the commodity continuous index divided by the S&P 500. This is a ratio. Whenever you get cheap, that's when you want to buy. You buy down here, you hold on. You sell up here when it gets expensive. You buy down here when it gets cheap. And we are way down here. This is cheaper than this. So we're going to have to come way back up, back to what I would consider to be more normal levels. Commodities are going to outperform the S&P 500. And you can see it clear as day in this chart how undervalued commodities are in relationship to history. This was a very major bottom low. We're putting in another major low. Here is Australia EWA. Now we're looking more at this because of the currency. It moves up when the dollar gets weak. Dollar was strong all from 08 till today. This is another indication or another signal to us saying that, look, the dollar's getting weak. Australian's currency is getting stronger and we're about to break out here. This is another signal that the commodity boom is happening. And we were seeing it across everything. So this is another trend line, a massive trend line that's breaking to the upside for Australia EWA. This is their iShares MSCI Australia Index Fund. Here is real time. We're at 26.17. We're actually now up here. So we've for sure clear breakout. Looking at another big picture, this is the MSCI Canada Index Fund, EWC. You can see higher lows coming up. We broke the downtrend line and we've easily broken. We've got a little bit resistance at 32.50. Right now we're at 37.42. So we're way up here on this breakout, way up here. It is killing it. We've broken out. The dollar weak, these guys are strong. So that's what I've got today. I wanted to show you those other information about all of this. It's clear as day to me that commodities are the sector to be in. If you guys want to play other stocks, you want to go into the non-dollar denominated stocks. EEM, EWA, EW, I think it was C. Those are all good. They're all good because if the dollar goes down, those are going to be strong. And they're breaking out of decade-long patterns, which is confirming that commodities are a good spot to be. If you guys like this analysis, give me a thumbs up. Thank you for listening. This is Finding Value.